morning and thanks for joining us on Happy Hour this evening. Now, Ashish and I were just talking about markets and the way they're confusing everybody right now. Technical levels are being broken left, right and center. Fundamentals don't seem to hold any meaning anymore, and increasingly they're looking bleak. So what kind of indicators does one really look at to figure out which way this market is going? Well, we decided to call a very special guest on the show today, Mr. Parag Parikh, a veteran who's been in the market for about over 2 decades now. Correct me if I'm wrong, sir. Thanks for coming on the show. Great to have you on. And we must start by actually emphasizing on the fact that he's gone to Harvard a couple of times to do specific courses on behavioral finance.
Now, sir, I'm going to ask you this. Of course, behavioral finance has to do with how people react to the markets. But here's my question. Markets are really badly behaved themselves right now. And it's starting to bother me. What is your view on this?
What are the markets? They are made up of people.
Sure.
And that's how people behave.
But there's also the small element of stocks. I mean, collapsing across the board, if I might add.
Yes, stocks are a product in the market.
Sure.
They are like an investment vehicle.
Sure.
Now, on the roads also you have so many vehicles. There are some drivers who drive very fast, some drivers who drive slow, some drivers who don't listen to the traffic signals. And that's what creates chaos, and that's what is in the markets, you know.
Sure.
People are driving stocks, and at one hint of some bad news, they start selling stocks.
Now, is it a hint of bad news? Because a lot seems to be coming our way. Oil prices, inflation, worries about the US economy. There's, of course, a little flutter of problems in the Middle East. Anything and everything. Once the market has decided to go downwards, there's a lot of reasons that come our way.
You know, but wouldn't you also agree that it's actually all of this bad news, genuinely bad news from the macroeconomic standpoint, that's actually pushing the markets also down? Markets can't, I mean, how will they fight back this entire barrage of, you know, terrible news?
See, all these bad news, they have not just come in today. They have been always there since the last 6 to 8 months.
Okay.
And only the market decided, now let's this thing go down. Give you a simple example. In 2005, the oil was at 40.
Yes.
It was climbing up. From 2004 to 2007, it's climbed from $40 to $100.
Sure.
2.5 times.
Yes.
And the index went from 6,000, the BSE index, from 6,000 at that time to 20,000.
Sure.
Now, if oil was going up, wasn't it bad news? Then why was the market going up? So, our minds are tuned to physics. For every action, there's a reaction.
Absolutely.
When markets, different things happen because people react, not with the event, but people react in how they feel. It's more of the sentiments which count.
You know, that's an interesting point you made about oil, because it's very valid and pertinent that, you know, oil more than doubled, and the market had one of its dream runs during the same phase. So isn't the quantum of news, I mean, if it's sort of one bad element, market can deal with that. But when it gets magnified, now you have credit crisis, now you have banks going bust, then you had, you know, your own fundamentals weakening here in India, inflation moving up. So that when the quantum of bad news increases, that's when the markets say, okay, enough is enough, time to turn.
No, I would say that every bull phase and a bear phase has its time. When people are rejoicing, any bad news will not affect them. And then we have had a bull run for the last 4 years. Now, if you were assuming that there's not going to be a bear run, and the newspapers and all were reporting that this is going to just go on out. Most of these TV channels would have analysts even telling, no, this is going to go up. Every day, they think you talked about stocks going up. Then you thought FIs are buying. Why would one buy a stock to make money? So one day that person would come and sell it.
Sure.
And now if they are selling it, we are making a big hue and cry about they are selling.
Because they've sold ahead of us. That's the problem.
Fair enough.
They are about to sell.
You know, I'm going to quote, I'm going to paraphrase one of your favorite authors, I think, Charles Mackay, who said, men think in herds, men go mad in herds, but they regain their senses slowly, one by one. Are we there now? Are we even regaining our senses, or are we still going mad?
Who is regaining the senses is important. Sometimes, after losing a lot of money, if you regain your senses, sometimes it's too late.
Sure.
It's not that the stock markets don't offer opportunities. They offer opportunities. But the problem is that when the opportunities come, people don't have the money to take the opportunities. And in investing, what's important is you have to invest when you don't feel like investing. But people invest when they feel like investing.
Sure.
And that's where you start paying exorbitant prices for the stocks, and your returns in the long run suffer.
So you would be investing, for example, right now? Because you'd perhaps, I mean, one doesn't feel like investing because the mood or the climate doesn't seem right. But is it the right time if you leave the emotions apart?
Well, I'll tell you this thing. I may be in this thing studied in behavioral finance, but I won't claim myself to be an expert even in identifying the thing that this is the right time to invest, because you don't know how things are going to. You know, tomorrow, if there's a problem with our border, the markets can go down by another 2,000 points. Now, would any analyst know about it, or would I know about it? So there's so much of uncertainty in the markets that investors should be looking at individual stocks, individual businesses, and then they find that there's a good value emerging, they sit down on it.
Okay.
But, you know, I'd like to take up this point of value in individual businesses. Let's take the example, for example's sake, of the capital goods space. Everyone knows India needs infrastructure. Everybody knows that there is a requirement of power in this country. A lot of these stocks were the darlings of the market, and they were rallying in big time. Now they've been beaten down. Many of them are hitting their 52-week lows. One would rationally think that this is logical, this has some meaning here, and perhaps it's a good time to invest. But is that rationale enough? Because ultimately it's money that drives stocks. So if, you know.
No. Here the mistake which is happening when people look at this, you got a right argument that, okay, this infrastructure is good for the business. So the company will make profits. Now, company is an X amount of size. So how many projects it can take? Even though it's got a backlog of thousands of crores, every year is going to be completion of certain. Plus, every organization, every business, they go through cycles. Now, what was happening in last 4 years is that what the company was going to be earning was discounted much ahead.
Okay.
Yes.
Now, if a company was going to show fantastic profits in the year 2020 because it was in the infrastructure space, you give the valuation of 2020 in the year 2006.
Fair.
But that's where the catch is, where people, they're saying, feel. Now, during the tech boom, there was one client of mine.
And you stayed completely away from tech, for the record.
No, but I'll tell you, I stayed completely, even just now, last
Him and
year.
Warren Buffett.
No. Warren Buffett is a different type of person, and he's successful for only one thing, because he's the ability to keep his emotions under control. Now, today in life, everything depends upon our ability to delay gratification. When you delay gratification, that means you don't tend to be greedy.
Fair.
Now, like if someone fools you, why is he able to fool you? Because you are greedy. Otherwise, if you're not greedy, if you're not looking at anything, he cannot fool you.